Hello everybody, it's Jason with Investing Logically. Hopefully you guys are having a good day today. In this video we're going to talk about 4 cheap / undervalued stocks. So in this video I'm going to talk about cheap as in the fundamentals cheap and if they've been beaten down by the whole market correction. So that's what I mean by cheap. So let's get to the video. Feel free to subscribe to my channel if you guys want to see more videos like this. Also feel free to like this up so more people can learn about investing in finance. So let's get to it. First stock on the list is Goldman Sachs. So ticker symbol GS. So this one's trading around $368. This one's quite a big company, $125 billion company. This one has been on a decline. So in 1 month down 3.6%. But in the year they're up nearly 91%. Recommending this is because bank stocks in the past 6 months they haven't been shown much love. So I do think they're going to make a massive move soon. Based on fundamentals, they have a 9.17 PE ratio. So basically what this means is anything that's a PE ratio there's a PE ratio of 15 and below is considered cheap. So if you look at like JP Morgan, Bank of America, they have a much higher PE. So I do think this outperforms most of the bank stocks out there. So it's a financial play. So I do believe that every portfolio should have a balanced element to it. So having diversified sectors, including these financial. So when there's a market crash, these stocks won't go down as much. I want to put this in a watch list, and why I think it's really cheap is because they just announced a dividend increase to $2 per share. This means they're making money from 2020 to 2021. They had a 22% increase in revenue. That was the highest in 11 years. So they're making money to be able to increase the dividend. Based on analysts, they have a price target of $410. That is like a 10% upside from now. So that just gives you an idea that some analysts are bullish. And we had 2 days ago we had some large institutions loading up on the stock. So it just gives you guys some background, but don't base your decision based on these factors. I do see this going to at least $400 by the end of 2021. I do think the financial sector is going to blow up in 2021. So has more 6 months to go. Let's see where this goes. Cheap stock on the list is Teladoc Health, ticker symbol TDOC. So this one I've been talking about this one I think before the correction. So this one is a telehealth medicine. So it provides medical help online. Instead of going to the doctor, you can go on their services, and then a doctor will give you assistance instead of going to the doctor physically. So in 2020 they went up 207%. They're actually down 52% at one point. So this one has been beaten down. Based on some analysts, they have a price target of $235, which is basically a nearly 40% upside from now. They also have some revenue estimates of, I think it's 85% for 2021. So that's really good. I've seen some large institutions buying heavy on the stock. And in terms of fundamentals, this one is a strong company. They had increased revenues before the COVID. So even when COVID didn't hit, they were still making money. And they have a strong balance sheet. I think in Q4 2020, they had tons of cash on hand. I covered this like a while back. And cash flows are on point. So this one is a good company, fundamentally speaking. Yes, they have the growth right there to grow to at least, I think in 5 years, at least to $400 a share. That's just my opinion. I do believe this company long term. I'm going to add more if there's dips below 165. So yeah, this one is a strong buy in my opinion. But right now it's already at discount, so I wouldn't mind buying more at this price. Basically, if you believe in the telemedicine sector, this would be a good buy. So the next stock on the list is Spotify. This one is ticker symbol SPOT. This one is my personal favorite. Right now, I do think it's cheap because it's on a massive discount from its current highs. Let me see if I can get this. $364. Now they're down 25%. They were actually down 40%. So this one is going to be a slow moving growth stock. They're only a $51.65 billion company, and I do think they're that is rather small, and I'll go through that really soon. So based on this analysis, they have an average price of $341, but they have a high of $460. That is really good. It's because of demand. So what I mean by this is that tons and tons of people using Spotify. So basically they provide music, streaming services for podcasts as well. So I study university, I go to school every time. I see students on Spotify for their music or podcast. It's everywhere. What this means is that a lot of people are using Spotify. I use Spotify myself. I pay for premium, and I personally listen to music and listen to podcasts. I do see this growing. We can see that from 2020 Q1 to 2021 Q1, they have increased 24% in users, monthly users, and their premium subscribers have also increased. So this gives us an idea that they could increase more in a few quarters ahead. This is not just in one geographical area. So we can see the total monthly users are from 24% is from North America, 22% is from Latin America, 20% is from the rest of the world, and 34% is from Europe. That is really good. So this is the international global business. So the next stock on the list is Dropbox, ticker symbol DBX. So this one's a 12.16 billion company. This one's a cloud servicing platform business. So they provide subscription services for cloud platform. So to store your files on, I think it's like $17 per month for like 2 terabytes of free storage. Not free storage, but like storage. And in 1 year, they're up 42.37%. That is not bad, in my own opinion. Based on fundamentals, they have a 19.94 P ratio. I do think it's really low, so I consider this being cheap. We know that they have great fundamentals, so we can see they have they had a 1.9 billion 2020 revenue, which was a 11% increase year over year. They have 700 million users and 180 countries, so that makes them a global business like Spotify. So my 1 year price goal for this is at least $40 by the end of 2021, but in 5 years time I do see it's going to the double digits eventually. Maybe not 2022, maybe 2025. So that's the end of the video. Those are my 4 cheap / undervalued stocks based on their fundamentals, based on their stock price from their highs. So let me know in the comments if you guys are buying these stocks. So with that being said, feel free to subscribe to my channel if you guys want to see more videos like this. Also feel free to like this video so my videos get to a larger and some more can learn about investing and finance. That's it from me. Hope you guys have a wonderful day today. See you guys next one, and happy investing.